Andy Rothman, welcome to the South China Morning Post.
Thanks, good to be here.
Now, as we talk, the Chinese delegation is in Washington for the 13th round of trade talks. What are we expecting? Will there be an interim deal of some sort? We are starting to hear some concessions from the Chinese side.
I don't know what kind of deal there'll be, but my base case is that there'll be some kind of agreement between the US and China in the not too distant future, which will allow both sides to remove most of the tariffs that are in place. And that's really important, not only for the short term, but it allows the two sides to start talking about the bigger issues in the relationship.
Now, both sides do meet on a very sour atmosphere. Are we seeing a decoupling between the two world's largest economy?
Well, first, I think that the Chinese government is getting used to how the Trump administration deals with other countries, and they seem to be shrugging off a lot of this and going into the talks with a positive attitude. But to get to your question, I don't think we're looking at decoupling or disengagement today, but I'm certainly worried about it in the future. When you think about it from the US perspective, China accounts for 1/3 of global economic growth. That's a larger share of global growth than the US, Europe, and Japan combined. It's impossible to decouple from something like that, and it doesn't make sense for the United States, in my view.
Okay, so carry on that tone of globalization. There are early indications from Golden Week that the Chinese consumers are spending less. Any concerns? I know you're usually positive about this.
I still think that China is the world's best consumer story, and they're not spending less. The growth rate of spending has been decelerating. So, for example, during Golden Week, 8.5% growth in sales compared to 9.5% a year ago. That's still really fast. And the growth rate of consumer spending has been decelerating a little bit every year for about a decade now, but that's off of a base that's become really big. So this is still a fantastic story for Chinese companies selling goods and services to Chinese people, and for those of us who want to invest in those companies.
Okay, so a very positive tone from you, but what's your forecast for China's GDP growth next year? Will it drop below the 6% mark?
I really don't care, to be honest. I've gotten out of predicting the GDP growth rate number many years ago. And I'm doing that deliberately because I'm trying to emphasize to people that it's the least important statistic in China. It just doesn't matter very much. It's also the one that is manipulated the most. So think about it. From an investor's perspective, whether growth is 5.9 or 6.1 really isn't going to change anything. So I would encourage people to focus on other numbers next week. What are income growth looking like? What is retail sales growth looking like? Inflation, corporate profits, things like that. Much more important.
Well, Andy, thank you so much for coming to South China Morning Post, where we keep a close eye on the talks coming up.
Thank you.